Solved problems. Preparation of manufacturing account, profit and loss account and balance sheet under single entry system. Problem. Using the information below, you are required to prepare for Rukave Nig Limited the manufacturing account and the statement of profit and loss account for the year ended 31st December 2015. Statement of financial position as at 31st December 2014. Ordinary shares of N1 each fully paid 100,000. Reserves 1,000. Trade payable 57,400. Non-current asset at cost 60,000. Inventories, raw materials factory 25,000. Work in progress 5,800. Finished goods 51,000. Trade receivable 35,000. Cash at bank 2,000. Administrative expenses prepaid 600. The following transactions occurred during the year 2015. Turnover less returns 243,000. Cash from trade receivable 234,700. Discount allowed 5,400. Bad debts written off 1,100. Purchase of raw material less returns 80,000. Payments to trade payables 82,500. Discount received 1,700. Factory wages paid 33,300. Manufacturing expenses paid 61,900. Administrative expenses paid 16,200. Selling and distribution expenses paid 16,800. Payment for purchase of non-current assets 30,000. Statement of financial position as at 31st December 2015. Non-current cost 90,000 rupee. Amount 60,000. Inventories, raw materials 24,000. Work in progress 5,000. Finished goods 52,000. Administrative expenses accrued 1,100. Factory wages accrued 700. Selling and distribution expenses accrued 1,200. The following information is also given below. A. Depreciation of non-current assets is to be apportioned between manufacturing, administration and selling in the proportion of 7:2:1. B. Discounts allowed and bad debts written off are to be regarded as selling distribution expenses. C. Discounts received are to be credited to administration expenses. We need to prepare the following ledger accounts and workings to prepare manufacturing account and the statement of financial position as on 31st December 2015. 1. Opening balance sheet to know the retained earnings or profit as on 31st December 2014. 2. Cash account to know the closing balance of cash as on the 31st December 2015. 3. Trade receivable account to know the balance of trade receivables as on 31st December 2015. 4. Trade payables account to know the balance of trade payables as on 31st December 2015. 5. Depreciation account to split between manufacturing, admin and selling in the ratio of 7:2:1. 6. Selling expenses to find out the closing balance of selling expenses as on 31st December 2015. Solution. Let us prepare the statement of financial position as on 31st December 2014 to find out the retained earnings or profit during the year 2014. Statement of financial position as at 31st December 2014. Liabilities amount, assets amount. On the asset side, non-current assets 60,000, raw materials factory 25,000, work in progress 5,800, finished goods 51,000, trade receivable 35,000, cash at bank 2,000, prepaid admin expenses 600, total assets 179,400. On the liabilities side, ordinary shares 100,000, reserves 1,000, trade payable 57,400. When we balance the account from assets and liabilities, there is a difference of 21,000. It amounts to retained earnings or profit. Total liabilities including retained earnings is 179,400. Cash at bank account opening balance 2,000 debit, trade receivable 234,700 debit, trade payable credit 82,500, factory wages credit 33,300, manufacturing expenses 61,900 credit, admin expenses 16,200 credit, selling expenses 16,800 credit, non-current assets credit 30,000, balance carried down 4,000 credit. Trade receivable account opening balance debit 35,000. Sales debit 243,000. Cash at bank credit 234,700 credit. Selling expenses discount 5,400. Selling expenses bad debts 1,100 credit. Balance carry down 36,800 debit. Trade payable account opening balance credit 57,400. Purchases credit 80,000. Cash at bank 82,500. Admin expenses discount 1,700 debit. Balance carried forward 53,200 credit. Let us prepare the depreciation account to split the expenses into manufacturing, admin and selling in the ratio of 7:2:1. Workings. Non-current assets 60,000. Add addition 30,000. Less closing balance 60,000. Depreciation 30,000. This is split into manufacturing, admin and selling expenses in the ratio of 7:2:1. Depreciation manufacturing 21,000. Depreciation admin 6,000. Depreciation selling 3,000. Total depreciation 30,000. In the ledger accumulated depreciation account, depreciation manufacturing 21,000 credit, depreciation admin 6,000 credit, depreciation selling 3,000 credit. Balance carry forward 30,000 accumulated depreciation credit balance. Selling expenses trade receivable debit 5,400, trade receivable debit 1,100, cash at bank debit 16,800, selling expenses accrued 1,200, total balance carried forward 24,500 debit. Let us prepare the manufacturing, trading and profit and loss account for the year ended 31st December 2015. In the books of Rukave Nig Limited manufacturing account, particulars amount. On the expense side, raw materials factory 25,000, work in progress 5,800, purchases 80,000, manufacturing expenses 61,900, factory wages 33,300, add accrued factory wages 700, depreciation manufacturing 21,000, total 227,700. On the credit side, raw materials factory closing stock 24,000, work in progress closing stock 5,000. When we balance the account, there is a difference of 198,700. This is finished cost of finished goods transferred to trading account. Trading account on the debit side, finished goods transfer from trading account 198,700. On the credit side, sales 243,000, finished goods closing stock 52,000, total credits 295,000. On the debit side, finished goods opening balance 51,000, selling expenses 24,500, depreciation selling 3,000. When we balance the account, there is a gross profit of 17,800 transferred to profit and loss account. In the profit and loss account, on the credit side, gross profit from trading account 17,800. On the debit side, admin expenses 16,200, depreciation admin 6,000, total expenses 22,200. When we balance the account, there is a difference of 4,400 representing net loss transferred to retained earnings account. Let us prepare the statement of financial position as on the 31st December 2015. In the books of Rukave Nig Limited, balance sheet as on 31st December 2015. Liabilities amount, assets amount. On the asset side, inventories, raw material 24,000, work in progress 5,000, finished goods 52,000, total inventory 81,000, trade receivable 36,800, non-current assets 60,000, add additions 30,000, less accumulated depreciation 30,000, closing balance of non-current assets 60,000, total assets 117,800. On the liability side, ordinary shares 100,000, reserves 1,000, retained earnings previous year balance 21,000, less net loss 4,400, net retained earnings 16,600, trade payable 53,200, cash at bank overdraft 4,000, admin expenses accrued 1,100, factory wages accrued 700, selling expenses accrued 1,200, total expenses accrued 3,300, total liabilities 177,800. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.